Morning, grade 12s. This is Mr. Chauke. If you're watching this, you are definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there. And I promise you that will make your academic problems a thing of the past. With that out of the way, let's get into the lesson of the day. Now, in this lesson, we are required to prepare the statement of comprehensive income. And our year ends on 28 February 2023. So if we are ending on 28 February 2023, it means that we started on the 1st of March 2022. So this is one of those basic foundational information that you need to know, that you need to make sure that you master. Okay, so when you do your income statement, you need to firstly make sure that you take the information that is given to you on your trial balance and you record that information on the you record the information on the answer book. So we are going to start with, remember your nominal section has got income statement items, which are your incomes and expenses. You need to make sure that you place them correctly according to the format that you are supposed to use. Okay, so we are going to start. In this case, our sales is a question mark, so meaning that we'll need to calculate it. So if you check here, our sales has not been recorded for us. Cost of sales has already been recorded. And then if you look here, the next item that we have is going to be salaries and wages. So we are going to have salaries and wages for 360,500. So they've already inserted it for us, so we'll just tick it to show that it has been recorded for us. After this, we're going to have stationery for 28,684. So I think they have also inserted it. Insurance also, so I'll just tick the ones that have been inserted for us. So this insurance has already been recorded. Rent income 92,736. Let me see, they have already recorded it. And then the next one is interest on fixed deposit for 12,400. I think I saw it somewhere here. It is interest income. And then directors fees also was entered as part of our expenses, so there's no need for us to enter what they have entered. And then what else have they entered? So this is the audit fees, 24,600. I think they've also insert the figure for us, so it's fine. And then the next one, we have bad debts for 16,680. Let's check if that information was recorded for us. So they've already recorded the final amount, so there's no need for us to do it. And also depreciation, so I'm going to tick them so that when we go to adjustments, we don't have to be going up and down. And then bad debts recovered, I think the amount was also insert here, so they've inserted it also. And then what else do we have? We also have ordinary share dividends. Remember I said they will go to your note. Okay, so almost everything here has been recorded. So what we need to do is to deal with the transactions that are going to follow. So please just make sure that all the items that you have, let me see how many we have. 1 2 3 4 5. Okay, but so far we recorded everything so far, so we just have to deal with the information. So let's go to the first transaction. Now here on the first transaction, they are saying that goods are sold at a markup of 80% on cost, and then on the cost. And then they're saying that the discounted rate for damaged goods sold during the year amounted to 14,600. Now before we deal with the discounted goods, we need to make sure that we get our sales first. Now remember, they told us that our cost price is 100%, our profit is equals to 80, so which means our selling price is equals to 100 plus 80, so we are selling out of 180%. Now if you look at this, they gave us a cost of sales of 1,845,000. So if we take that 1,845,000, it will give us, we'll multiply it by 180 over 100. It will give us the actual sale that we were supposed to make. So if you say 1,845,000 1,845,000, and you say multiply by 180, and then you divide by 100. It's going to give you 3,321,000. So we were supposed to get 3,321,000. But remember, guys, we have goods that were damaged. So it means we did not sell those goods by their original price. We gave a discount to our customers. So we would say 3,321,000 minus that 14,600. So let's do it quickly. So it will be you need to show how you got that first. So remember, you said 1 million in calculations, you said 1,845,000, and then you said multiply by 180 over 100, and then it gave you 3 million. Let me check the answer. It gave you 3,321,000. So we got 3,321,000. Then we subtracted the 14,600 for the discount that we offered to our customers. Okay, because of those damaged goods. So if you say that 3,321,000, you say let me see, 3,321,000, and then you say minus 14,600, it gives you 3,306,400. So we have our sales at 3,306,400. Then it means that our gross profit from here, we will take this amount and say minus 1,845,000. Then we'll be left with 1,461,400. Okay, so let's see. So let me put it here so that we can calculate. So remember, we are going to say 3,306,400 minus 1,845,000, and then it gives us 1,461,400. 1,461,400. So we have already calculated our gross profit. Most of the marks are going to be allocated to you getting the right sales figure. Okay, so you need to make sure that you remember that. And my apologies for the paper not being that 100% clear. I got it as it is. Okay, next they're saying that stationery to the value of 22,600 was used. Normally they give us the on hand, guys. So if they give you the used figure, it means they've not given you on hand. You just take it straight on the box for final amount. It means they give you the figure that has already been calculated. Okay, so that used figure, stationery used, we are going to take it as 22,600. So under stationery, we are going to go to the final amount, and then we'll put that 22,600 here. Now if you look at this, this is the stationery that you bought. You bought the stationery for 24,684. So if I say 24,000, let me see, if I say 24,684, I say minus 22,600, it will give me the value of my hand. So it means on the value of my on hand. So it means that the on hand stock was 284,000. So I'd say minus 2,084,000. Okay, so the answer that we get is 2,084. So normally they will give you this one, you look for this one. So please make sure that you check what are you given. Let's go to the next adjustment. The next adjustment says that they are saying that included in the amount for insurance was a year's premium for 5,520, and then they are saying that it was paid for the period 1 December 2022 for the year ending 30 November. So now here you don't confuse yourself, guys. You know that you were only supposed to pay for December, January and February. So you were supposed to pay for 3 months. Remember, you're supposed to pay for December, January and February only, but you paid for 12 months. So if you say 12 minus these 3, you're going to be left with 9. Okay, so if we say 9 multiplied by 9 over 12 multiplied by 5,000, 520. It will give us the value that was prepaid. So 9 divided by 12, multiply by 5,520, it is giving us 4,140. So it means that 4,140 was prepaid, and therefore under insurance we must deduct it. So we are going to do that. Under insurance, we are going to continue and say minus 4,140. Then we go to the next transaction. Let's hear what the next transaction says. Now, the next transaction says that one worker was not paid his salaries for February 2023. So, in other words, we can treat him as if he was omitted. They're saying that his details are as follows: deductions, net salary, and contributions. Now, what we know is that they are also telling us that contributions are part or are recorded in the salaries and wages journal. So, meaning that they are recorded under one amount. So, what we need to do is to record. Remember, the total expense for us as a company on an employee, we are paying him a gross salary plus the contributions. Our total cost on that employee will be our gross salary, the gross salary of that employee plus the contributions that we make for that employee. Okay, but in their account they will only get net salary, but what we totally spend on them is gross salary plus contributions. So here they gave you net and gross. So what you can do, you can just add them. So you're going to say on the paper, you're going to say plus, let me just do our gross calculations. Okay, so remember our gross calculation here, it will be we have 5,000, we have 5,000. Okay, let me go back to that document. My apologies about that. So for the calculator, remember we have 5,600, right? And that 5,600 plus 14,500, so it's 20,100. So we are going to say plus 5,600 here under salaries, but unfortunately I don't have space, so I'll just say plus 21,500, and then also I'll add the amount for the contributions by the employer. And according to this, the employer contributed 3.8, so I will then say plus 3.8. Then we have the final figure, but we'll do the calculations for that after. And then let's check what else are they saying to us. Next, they're saying that so we are done with that employee. They're saying that the rent was received until 30 April. So we can already see that rent has been received 2 months in advance. And they're saying that the monthly rent was increased by 12% on 1 November. So when it's like this, guys, it's always best to draw your timeline. So our timeline would have March, April, May, June, July, August, September, October, November, December, January, February, March, and April. Okay, so now remember they said the rent was increased on the 1st of November. So November, it's here. November, it's here. So it means on the month before the increase, rent was always 100%. So we have 1, 2, 3, 4, 5, 6, 7, 8. So for 8 months, rent was 100%. So if you say 100 multiplied by 8 is going to give you 800. And then for the rest from November up until April, 1, 2, 3, 4, 5, 6. For 6 months, it became 112% because rent increased. So we're going to say 112 multiply by 6 and see how much we get. So when you say 112, 112 multiply by 6, it gives you 672. So we're going to have 672 here. So the total of the two, how much are we going to get? So if we say 800 plus 672, it will give us the total percentage of the rent that we have received. So it's 1,472. So the total for this is 1,472. But for us, we are only interested in just 2 months. So it means it will be 112 by 2 because we received up until April. So if you say 112 multiplied by 2, it gives you 224. So we're going to say 224 divided by 1,472 times the amount of rent that we have received. And according to here, the rent that we have received in our answer book, it shows that we received 92,736. So multiply by 92,736 and see how much we get. Very important for you to show your calculations, guys. So remember, we'll say 92,736 multiply by I think it's 224 something like. Let me just try to move the calculator. So we'll multiply by 224 divide by 1472, which gives us 14,112. Okay, so this is the prepaid amount that we are supposed to subtract on our rent income. So 14,112 will be subtracted. Okay, so we're going to subtract it here. So under rent income, we're going to say minus 14,112. Then we are done. Okay, then we move to the next one. The next transaction says that the fixed deposit at West Bank was increased by 40,000 on 1 June 2022 at the existing rate of 8% per annum. The transaction was recorded. So once they say it was recorded, it means that the increase has already been included in our final year's trial balance. Okay, and they're saying that we need to make provision for the outstanding interest, and interest is not capitalized. So when they say interest is not capitalized, they mean that they don't add interest on the fixed deposit. Interest is recorded separately. So let's do this. Let's check how much. Remember, the increase took place in June, so we will still draw our timeline to make life easy for us. So remember, you'd have your March, April, May, June, July, August, September, October, November, December, January, February. Now let's check what does the information say. They said that our fixed deposit increased by 40,000 on the 1st of June. So let's check where the 40,000 is on the 1st of June. So this is where we are. This is where we are. So now here what's happening is that all these months were affected by the increase. Okay. So here luckily we are given the trial balance from last year. So it shows us from last year that our fixed deposit was 140, and then at the end of the current year it was 108. So we need to calculate interest at 140 and 108. So let's check. So now remember, the interest is 8%. So for March, April, May, it was 140. So which means we must calculate for before increase and then also for after. So before it was 140,000. So 140,000 multiplied by 8 over 100 multiplied by 3 over 12. Let's see how much we are getting. 140,000 multiply by 8 divide by 100 and then multiply by 3 divide by 12. It gives us 2.8. So our answer here is 2,800. Okay, so let's see when it becomes 180. It will be 180,000 multiply by 8 over 100 and then multiply by 9 over 12. Okay, so let's see how much we are going to get for this. So 180,000 multiply by 8 divide by 100 and then multiply by 9, divide by 12. Okay, I think there's an error somewhere. Let me check. Remember, from June, July, August, September, October, November, December, January, February. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, let me see something. 180,000 multiply by, let me just confirm the percentage, because I think that could be the one that is making this to be a trick. So it's still 8%. So 180,000 multiply by 8, divide by 100, and then multiply by 9, divide by 12. We are getting 10,800. So according to this, it's supposed to give us 10,800. Okay, so here we are supposed to get 10,800. Let me confirm this one here, because I think, let me see if I add them. So 10.8, 10,800 plus 2.8, it gives us 13,600. So the total that we are supposed to get for the interest on fixed deposit is 13,600. Let's see how much we got on our answer book. So now if we check here, we only received 12,400, but we are supposed to get 13,600. So which means we need to check what is short for this to become 13,600. So we'd say 13,600, 13,600 minus 12,000, minus 12,400, and then the answer we're getting is 1.2. So this is short by 1.2. Then we are done with that fixed deposit. We can go to other adjustments. The next adjustment says that the company has got four directors. So we need to note that they have 4 directors, and then they're saying each one of them receives the same monthly fee. So here they earn the same salary, so it should not really be a problem. And they're saying that 2 directors received their fees for the whole year. Okay, so let's check. We have 4 directors now. We have 4 directors. These are our directors. We have director 1, director 2, director 3, director 4. Now they are saying that all of these directors, only 2 of them got complete payments. So all of these 2, they got 12 complete payments. Okay, and then let's hear what else are they saying. They're saying that one director only received for 9 months, so the other one received for 9. So we can say the third director received for 9, and then let's hear what the other director received. And then they're saying that one has already received for March, so which means we have prepaid him, so it will be for 18 months. Okay, now when we check, let's check how much we're going to get from here. So it's going to be 24 plus 9, and then plus 13. It gives us 46. So it means that we have paid all the directors 46 months, but we need to check how many months were we, how many payments were we actually supposed to make for them. So this one, we're supposed to make 12, 12, 12, and 12. And then if you say 12 times 4, it will tell you how much accurately were you supposed to pay them. So 12, uh, 12 multiplied by 4, 12 multiplied by 4, it gives us 48. So we were supposed to make 48 payments. Okay, now we only made 46 payments. Remember, one was prepaid, one was underpaid. So to know how many payments we were supposed to make, we know what is known to us. So we know that we've made 276,000 worth of payment. So we're going to say multiply by 48 over 46. We just want to know how much we actually supposed to pay them. So remember they gave us what they paid, 276,000 multiply by 48 divide by 46. It tells us that the total that we were supposed to pay is 288,000. Now let's check what is the difference between the two. So if you say and you need to show this calculation somewhere. If you say 288,000, then you subtract, or what we can do, let me try to see if I have space. I want to show it on the answer book. Okay, let's go to our answer. So under director's fees, you see you don't have space, but what you can do, you can use the space from here, this side here, okay, to show your calculation. So let's see, if we say 288,000 minus 276,000, it shows us that we are short of 12,000. So here under director's fees, we'll just say plus 12,000, and then our answer will give us 288,000. This is how much we were supposed to pay, remember. Okay, now let's go to the next one. What are they saying to us? Audit fees are still outstanding. So if our audit fees are still 25% of the audit fees is still outstanding, it means we've only paid 75%. Okay, so let's check what is the audit fee. So we are going to say let me check. So according to this, in our audit fees, we only paid. So if we say 24, if we say 24,600 multiply by, remember we want the 100%, multiply by 100 over 75. It will tell us the total that we were supposed to pay for the year. So let's see, 24,000 24,600 multiply by 100 divide by 75% of the given amount. So it gives us 32,800. Okay, so the answer that the amount that we were supposed to pay is 32,800. Let's check another way. So if we say uh 24, if we say 24,600 divide by 0.75, it gives us the 100% of the amount, so it's still the same. Okay, now let's check next. What are they saying to us? 1,670 was received from a debtor whose account was previously whose account was previously written off in the previous year, and they're saying that the amount was recorded in the debtors control column in the CRJ. Correct the error. So remember, when a debtor pays us, we are supposed to say debit bank, and then we are supposed to credit a bad debt recovered. Okay, but what did they do? They credited, for them they credited, they did not credit our bad debt recovered. They actually credited our debtors control. So we need to add this back in debtors control, and also add this 1,670 to our bad debts recovered. So in our income statement, we will add it to our bad debts recovered. Okay, so I'm going to do that just now. So under bad debts recovered, I'm going to say plus 1,670. And then remember to add it back to your debtors control because it was subtracted by mistake. And then the next part says that provision for bad debts must be adjusted to 9360. So once you adjust provision for bad debts to, you must check these conditions. I normally tell my learners that if they say to them that they want, if they give you 2, it means that is the new balance. Okay. And then once they say buy, whatever that you are going to get is going to be the adjustment figure, which we call it the difference. Okay. So check where we are now. Our provision for bad debts for last year, was 9,820. So we are moving from 9,820. We are moving to 9,360. Now, here's what you need to know. Should it go down? If it decreases, you are going to record the difference under income. If it increases, you are going to record the difference under expenses. Okay, so let's check what is the difference. 9,820 minus 9,360. We are getting 460. So it has went down by 460. So this 460, we will record it as provision for bad debts adjustment under other operating incomes. Okay, so I'm going to do that. So we'd have provision for bad debts. I'm not going to write in full because I'm using a bigger pen. Now we know you are supposed to say 9,820 minus 9,360, and then it gives you 460. So please, guys, try to show calculations as much as possible. Okay, so we'd have that 9,360, that 460. Okay, I'm gonna need to let me see if I can't. I need to reduce the size because it's very big. So okay, I think this one is better. So I'm going to erase here. Okay. So remember, the difference that we are getting here is 460. So we'd have that 460 there. Now let's check what else we have. The next transaction says that it says that, okay, this one of the loan will affect our balance sheet. So I'm not going to go through it because we are not doing balance sheet. Remember, on the question paper, there's a section whereby they told us that the interest on loan is our balancing figure. So we are interested on the interest on loan, and also this one about shares and dividends affect the balance sheet, so we will not use it for that. And then the next one, they are telling us that income tax is calculated at 30% of the net profit before income tax. Okay, and they're saying that the net profit after tax was calculated as 422,450. So which means this 422,450 represents the 0.70 or the 70% the after tax. So let's check here. They gave you on the answer book they've already recorded the after tax for you. So you want you want the income tax. So we are going to use UK method. Remember, you'd say 30 out of 70 multiply by 422,450, and then it will give you the amount. So let's quickly do it. 30 divide by 70 multiply by 422,450, and it gave us, remember it should be in bracket, 181,050. And then remember, for us to get our before tax we must add these two. So we'll say this answer then plus 422,450. It gave us 603,500, but let's confirm. So here, if we say 422,450 plus 181,50, we're getting 60. Let me check here. We're getting 603,500. Okay, so let's now enter the info. We are done dealing with adjustments. Let's enter our final figure. So let's start with under our rent income. So let's see, in terms of our rent income, remember we are going to say 92. Okay, let me bring it here. We're going to say 92736, 92736, we say minus 14,112. 92736 minus 14,112, we are left with 78,624. 78,624. Let me confirm it again. So 92736 minus 14 112. Okay, it's fine. Now let's check our bad debt recovered. We're going to say 3,850. I think I'll bring it aside here. 3,850 plus 1,670. It gives us 5,520. And then from there, all we need to do is to get the total of our operating incomes. So we're going to say 78624 78624 plus 5,000 5,520, and then we also say plus 460. It gives us 84,604. I hope we are still together, guys. So remember, 78624 plus 5,520 plus 460, and then we are going to say 1,461,400 plus 84,604. It gives us 1,546,004. Okay, I hope this makes sense, guys. Now we are going to finalize our operating expenses. We are going to add all of them. So let's see, in terms of salaries, how much are we going to have? So our salaries, we already have 360,500. So I'm going to say plus 21,500, and then also plus 3.8. It is giving us 385,800. Okay, and then let's check in terms of our Insurance 46,500. 46,500. We subtract 4140. It gives us 42,360. Okay. Now let's add all our operating expenses. Remember, operating expenses should be bracketed. So we're going to say 385,800 plus 22,600 plus 42,360, and then also plus 288,000, and then plus 32,800, and then plus 16,680, and then plus 46,000. So it gives us 834,240. Okay, so let's verify again. 385,800 plus 22,600, and then plus 42,360, and then plus 288,000, and then plus 32,800, and then plus 16,680, and then plus 46. Yeah, so it's 834,240. So okay, so let's get our operating profit. 1,546,004 minus 834,240. So it is giving us 711,764. Okay. Okay. And then from here, guys, we are going to add it together. We are going to say this answer plus 13,600. Okay, let me do it like this: 711,764 plus 13,600. It's giving us 725,364. 725,364, and then we have to get interest expense. And interest expense, according to here, if we say 725,364, 725,364, 725,364 minus, okay, to get our interest, we'll say 603,500 minus 725,364. Remember, you have to use bottom up approach. Okay, 725,364 minus 603 500. So it's 121,864. So our interest expense is 121,864. Thank you guys for watching. If you want me to become your personal tutor, you're more than welcome to get in touch with us by using the details that are available in the description of this video. I hope this lesson will make sense for you. You can also watch Mr. Simbi's version of the lesson on Pagama Research. It was a live lesson, so I think that will also help you. I was just making this to be short also for those who could not attend yesterday, so please make use of this material that is provided to you by the department, guys. Thank you so much for watching. God bless you. Shalom.